Mainstreet Corporation stock, a monthly dividend-paying stock which is very popular among dividend investors. A monthly dividend-paying stock can be very attractive, but how about the fundamentals of this company? And is the dividend sustainable in the future? In this video I will show you everything you need to know about Mainstreet. I will show you what Mainstreet does, and I will show you my fundamental analysis to see if main stock is a buy or not. I'm very excited to see what you guys think about Mainstreet, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. Please subscribe to join the community and to receive multiple analysis every week, where I will tell you everything you need to know about the stock market. So, what does Mainstreet do? Mainstreet provides one-stop capital solutions to lower middle market companies and debt capital to middle market companies. Mainstreet's lower middle market companies generally have an annual revenue between 10 and 150 million. Mainstreet claims that diversity adds structural protection to a portfolio, revenue sources, income, cash flow, and importantly, the dividends. Right now, Mainstreet has a portfolio of 184 companies, 73 lower middle market companies, 75 private loan companies and 36 middle market companies. For me, this looks very good already, because this looks well diversified. The average investment is sitting at 16.6 million according to Mainstreet. For me, it's very important that a company is well diversified. In this pie chart we see that the biggest industry only represents 8% of the total portfolio, which is a great thing, especially for these types of companies. You don't want to rely on just a few industries. Whenever there's a problem in one or more industries, Mainstreet is enough diversified to operate at the maximum level because of all the other industries. The same goes for geolocation. In here we see that Mainstreet is well diversified throughout the US, which also comforts me a lot. In here we see that the total investment income in million is growing nice and steady over the past years, except for 2020, which is related to the Roni virus. I like to see it at a steady pace and not up and down pattern. So this is also a good thing in my opinion. In this graph we see that the portfolio investments and the DNII per share are also increasing over the past years, and they both had a big jump in 2021. It looks like Mainstreet is back on track and is continuing to grow from here in terms of portfolio investment and DNYY per share. So now that we know a bit more what Mainstreet does, it's time to check the historical stock price performance. The first thing I want you to show is the total share return performance since IPO in 2007. Mainstreet, the black line in this graph, did outperform all major direct indices. Since 2007, Mainstreet did return almost 900%, while the peer group had a total return of 650%. The S&P 500 did return 340% according to Mainstreet. So, Mainstreet almost tripled the S&P 500 in terms of total return. But if we check the 5-year chart, we see that Mainstreet is nearly flat in stock price, and had this big downfall in March 2020 of course. But overall they are only up 9.9% over the past years, which isn't a lot. If we check the year-to-date chart, we see that Mainstreet is down roughly 5%, which is similar to the S&P 500 year-to-date chart. So it looks like the stock price isn't doing a lot of going up and down in the past couple of years, as we saw before. This isn't a bad thing necessarily, but it does mean that the profit or return must come from the dividends, which we will discuss later in the video. If we check the earnings in the last 2 years, we see that the EPS is beaten 6 out of 8 quarters, has 1 miss, and 1 quarter was in line with the analyst. This looks good to me. You want your stock to keep beating the analyst with the EPS. Revenue has an 8 out of 8 revenue beat, which is really great. It comforts me that this company is beating the analyst in terms of revenue in the past 2 years. The next thing I want to check are the fundamentals of this company. Mainstreet is a 2.99 billion market cap company with a PE ratio sitting at 8, which is really low and very typical for this sector. The forward PE ratio is sitting at 14, which is significantly higher. The price book ratio is sitting at 1.67, which is quite alright for this type of company. Profit margin is sitting at 140%, which is a bit strange in my opinion, so not sure what is happening there. I checked several websites and they are all saying the same profit margin, so please share your thoughts on this profit margin in the comments. Operating margin is sitting at 83%, which is similar to the industry they operate in. Return on assets is sitting at 4.6%, which is a bit low to be honest. You want this number sitting at a minimum of 10%. But return on equity is sitting at 20%, which is quite nice. The 12 trading month revenue is sitting at $289 million and has a 31% quarterly year-over-year growth, which is a great thing. So, revenue is going up nice and steady except for 2020, which we all know is related to the Roni virus. Another great thing I like to see is the quarterly year-over-year growth. If we check the EPS, we also see that it's going up, but not as steady as the revenue. It has gone up and down sometimes, so I prefer to see this number a bit more steady, but as long as it's going up, I think it's alright. If we check the balance sheet, we see that mainstreet has a total cash of $32 million and a total debt of $1.8 billion. Companies use debt to grow the business, but it has to be at a healthy level and they need to have enough cash on hand to pay down a big chunk of the total debt. I think their debt is too high for the amount of cash they have right now. So I'm not that comfortable with the amount of total debt I'm seeing here. The current ratio is sitting at 1.67, which is fine by me. You want this number between 1 and 2, but it also depends on the industry the company is operating in. If we check the cash flow statement, we see that operating cash flow is sitting at a minus of $500 million, and the leveraged cash flow 12 trading months is sitting at $117 million. It's very important to have enough cash to pay down debt as mentioned a second ago, but it is also used to pay dividends, buy back shares, do acquisitions and all other kind of things. So these numbers aren't looking that good to be honest. If we zoom in on the cash flow statement and check the breakdown, we see that operating cash flow is negative in the past couple of years, but it wasn't as low as currently is. A thing I do like to see is the repayment of the debt. They are trying to bring down the amount of total debt, but on the other hand, the issuance of debt is higher, so this might be a thing you want to dive into. Another really important thing is that you want them to be able to pay the dividends, because we saw the stock price is nearly flat over the past 5 years and you need to get the dividends to outperform the S&P 500 or inflation at least. So whenever this company is cutting or freezing the dividends, you have a big problem, because there will be a huge sell-off and no more dividends to collect. If we check the total dividends paid, we see that it's increasing every year in high amounts, except for 2020, where they did decrease the dividends because of the Roni virus. But in 2021 they are trying to increase them again, so it's highly likely the total paid dividends will go up from here. Next to that, mainstreet does issue a lot of new shares, which is something I don't like at all. But it has to be said that for these type of companies it's a bit different and normally is used to raise capital. The negative side of issuing more shares is that you need to pay more dividends without increasing the dividends at all. This is really important and a thing to keep in mind. If we check the payout ratio breakdown, we see that based on the 12 trading months of earnings, the payout ratio is sitting at 53%. Based on this year's estimates, it will be sitting at 90%. And based on the free cash flow, it's sitting at 85%. If we check the dividend scorecard on Seeking Alpha, we see that mainstreet does pay a 6.13% dividend yield and an annual payout of $2.85. Payout ratio is discussed a second ago. The 5-year growth rate is sitting at only 1.5%, and the dividend increases in a row is sitting at 0 years. To be honest, the dividend yield is quite a nice thing, sitting at 6%. You've got yourself a big, high dividend yielder. But the 5-year growth rate is nearly flat and the payout ratio is something to keep an eye on with the increasing shares outstanding and the negative free cash flow. One of the things people love about mainstreet is that they pay a monthly dividend, and in my opinion it's a really nice thing to receive dividends every month. But to me it only counts when it's sustainable, increasing and well managed. I have my questions with these 3 things for mainstreet. So, my conclusion is a big mix. I really like the diversification of mainstreet. It looks well managed and they know how to invest in their portfolio. But financially I'm a bit worried about this company. We did saw that the stock price is nearly flat over the past 5 years, so all the returns need to come from the dividends. And to me it feels this is a bit of a problem for mainstreet. It is really nice to have a monthly dividend paying company in your portfolio, but I would prefer a well-managed and healthy dividend paying company all day. So a monthly dividend is nice to have, but shouldn't be a decision maker. The fundamentals of this company are a bit mixed in my opinion as well. The PE ratio is really low, but the debt is at a high level and the cash flow can pay down a big chunk of the total debt. So to me it feels like a trap, and you might end up disappointing when owning this stock in the long term, unless they are able to recover financially. So for now, mainstreet isn't a buy for me because of lack of financial performance, and I think there are better dividend paying stocks to own right now. If you really like to have a monthly dividend paying company, I think there are better alternatives than this one, such as Realty Income or Stack Industrial, for instance. For now, I'm skipping this stock and try to find better dividend growth stocks. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.